My business partner stole my company while I was in the hospital, so I let him keep it, along with $4.7 million in hidden debt. I remember the exact moment Derek Holt realized what I had done to him. It was a Tuesday afternoon in March, and I was sitting in a coffee shop on the corner of 5th and Madison in downtown Chicago when my phone lit up with a call from a number I didn't recognize. I answered on the second ring. The voice on the other end was Derek's attorney, a man named Franklin Gross, who charged $850 an hour and had a framed photograph of himself shaking hands with a sitting senator on his office wall. He wasn't calling to congratulate me. He was calling because 6 hours earlier, a process server had delivered a package to the offices of Holt Meridian Consulting, LLC, a company that used to be called Marsh Holt Analytics. And that package contained a UCC-1 financing statement, a personal guarantee cross-default notice, and a letter from my attorney informing Derek that the $4,718,204.17 in outstanding debt obligations he had personally guaranteed were now in acceleration status. All of it. Every dollar. Due in 30 days. There was a very long pause after I said hello. And then Franklin Gross said, in the carefully controlled voice of a man who has delivered bad news before, but not quite news this bad, quote, 0. I took a sip of my coffee. It was a medium dark roast, $2.75, and it was excellent. Quote, 1, I said. Quote, 2, but I'm getting ahead of myself. Let me start at the beginning. My name is Elena Marsh. I'm 34 years old. For 8 years, I worked as a forensic accountant, first at a mid-sized audit firm in Chicago called Greenfield, Pasternak & Sloan, and then on my own. Forensic accounting is not glamorous. It does not make for good cocktail party conversation. When I told people what I did for a living, they would nod politely and then pivot to asking someone else about their vacation. But forensic accounting is, at its core, the art of finding what people are trying to hide. It is the discipline of reading every line of every document with the understanding that the truth is almost never where someone wants you to look. It is slow, meticulous, and profoundly unglamorous work. And it turns out it is the single most useful skill a person can have when someone is trying to steal everything she has built. I met Derek Holt in October 2018 at a continuing education seminar at the Westin Michigan Avenue. He was 41 years old, broad-shouldered, with silver at his temples, and the kind of easy confidence that fills a room without asking permission. He was a management consultant, working independently after 12 years at a boutique firm called Stratton Advisory Group. He wore a Breitling Navitimer on his wrist and a sport coat that cost more than my monthly car payment. He shook my hand at the coffee station between sessions and said, quote, 3. I was suspicious immediately. Beautiful men who read forensic accounting papers don't usually materialize at coffee stations. But he was genuine. He knew the paper. He asked intelligent questions. He had a vision. And by the end of that seminar, we had agreed to have dinner. If you're enjoying this journey, tap subscribe and share in the comments where you're watching from and the time there right now. I read each one. Thank you for being part of this. The idea for Marsh Holt Analytics emerged over the course of 3 dinners, 2 phone calls, and 1 very late night at a whiteboard in my apartment on North Paulina Street. Derek's theory was elegant. Large corporations were hemorrhaging money through procurement fraud, ghost vendors, and undisclosed conflicts of interest that standard audits almost never caught. My skill set could find the problems. His network and sales ability could bring in the clients. We would split ownership 50-50, pool resources, and build something that neither of us could build alone. I will be honest with you. I knew the risks of a 50-50 partnership. I had seen what they could become. I had written reports on companies destroyed by them. But Derek was compelling, and I was 30 years old, and the idea was genuinely good. And sometimes intelligent people make decisions that they later have to document in excruciating detail as evidence. We incorporated Marsh Holt Analytics, LLC in Illinois on January 14, 2019. Filing fee, $150. 2-member LLC, equal shares. I drafted the operating agreement myself over a weekend. It was 37 pages long. Derek signed it without reading it, which should have told me something, but at the time I interpreted it as trust. I have since revised my interpretation. We set up a business checking account at First Midwest Bank with a $15,000 combined initial deposit, $7,500 from each of us. We leased a 1,400 square foot office on the 18th floor of a building on Wacker Drive for $6,200 a month. We hired our first employee, an analyst named Priya Nair, in April 2019 at a salary of $68,000 a year. And we got to work. The first year was difficult in the way that all first years of businesses are difficult, which is to say it was terrifying and exhausting and occasionally transcendent. Derek was a gifted salesman. He could walk into a room with a CFO and emerge 40 minutes later with a signed engagement letter. He understood how powerful people thought. He knew how to make them feel smart while simultaneously convincing them they needed help. In 2019, we closed 11 engagements totaling $847,000 in revenue. After salaries, rent, benefits, software subscriptions, and professional liability insurance, we netted $94,218. Not life-changing money, but real. By the end of 2020, revenue was $1.3 million. By end of 2021, $2.1 million. We had 8 employees. We had moved to a larger office on the same floor, 2,800 square feet, for $10,400 a month. I was sleeping 5 hours a night and loving most of it. And Derek was flying business class to client meetings and ordering $340 bottles of wine at dinners I sometimes didn't attend because I was in the office at 11 p.m. reviewing work papers. This is the part where I tell you the thing I noticed but chose not to examine too closely for too long. Derek's lifestyle had expanded dramatically since we started the company. He had traded his Wrigleyville condo for a 3-bedroom penthouse in the West Loop with floor-to-ceiling windows and a rooftop deck, purchased for $1.28 million in June 2021. He had acquired a 2021 Porsche Cayenne in chalk white MSRP, $94,400. He wore Loro Piana cashmere and carried a Mont Blanc briefcase. None of this was impossible on a 50% ownership stake in a profitable company. We were each drawing $240,000 in annual distributions by 2021, but the lifestyle always seemed to slightly exceed what the math should allow. I noticed. I filed it. I didn't act on it. Forensic accountants are very good at finding fraud in other people's companies. We are sometimes less good at acknowledging it in our own. The company kept growing. 2022 revenue hit $3.4 million. We brought in 3 new senior analysts and promoted Priya to Director of Investigations. We landed our first Fortune 500 client, a logistics conglomerate called Meridian Distribution Partners, through a connection of Derek's. That engagement alone billed $420,000 over 8 months. Derek started calling the company Holt Meridian in casual conversation, a nod to our biggest client, which I found slightly irritating but attributed to salesmanship. He liked the sound of it. He liked a lot of sounds. He liked the sound of his own name especially. I am a forensic accountant. I deal in facts, not impressions. I kept working. On September 8, 2022, I was admitted to Northwestern Memorial Hospital. I had been experiencing shortness of breath and chest tightness for 3 weeks and had been attributing it to stress, which is what people do when they are afraid of what a doctor might tell them. The cardiologist on call, a calm and precise woman named Dr. Anita Reyes, informed me that I had a condition called hypertrophic cardiomyopathy, that my situation required immediate intervention, and that I was not leaving the hospital for at least 2 weeks. I remember calling Derek from my hospital bed that evening. He answered on the 4th ring. "That's rough," he said. "We've got the Meridian Quarterly coming up. I'll figure it out." He did not ask what hypertrophic cardiomyopathy was. He did not ask if I needed anything. He did not visit. I was in the hospital for 19 days. I came home on September 27, 2022. My doctor had ordered an 8-week period of reduced activity, which in practice meant I was working from my apartment in 3-hour blocks with mandatory rest periods in between, which is like asking a forensic accountant to solve a jigsaw puzzle while wearing oven mitts. I logged into my company email. I logged into our project management system. I logged into our accounting software, QuickBooks Enterprise, to review the September financials. And there, in the accounts payable ledger, was a line item that made me stop. A payment of $34,800 made on September 19th to a vendor called Meridian Consulting Advisors, LLC. I did not recognize this vendor. We did not have a vendor by this name in our approved vendor register. Our client was Meridian Distribution Partners, a different entity entirely. I clicked through to the supporting documentation. There was a one-page invoice with a generic header, a description that read, Strategic Consulting Services, August to September 2022, and a remittance address on North State Street. No tax ID, no contact information, no deliverable specification. I stared at this invoice for 4 minutes and 17 seconds. Then I opened a new spreadsheet and started working. What I found over the next 6 days, working in 3-hour increments with oven mitts on, was systematic and methodical and the kind of thing that, as a forensic accountant, I recognized immediately because I had found versions of it in 14 other companies over my career. It was a ghost vendor scheme, simple in construction but well hidden in execution. Meridian Consulting Advisors, LLC, had been incorporated in Delaware on March 3, 2021. 2 years before I found it. It had a registered agent in Wilmington and a mailing address in Chicago that, when I cross-referenced it against public records, turned out to be the building where Derek's accountant maintained a shared office. The sole member of Meridian Consulting Advisors, LLC, was listed as a Delaware holding company called D. Holt Management, LLC. I did not need to look up who D. Holt stood for. From March 2021 through September 2022, 18 months, Meridian Consulting Advisors, LLC had received 53 payments from Marsh Holt Analytics, ranging from $8,400 to $46,200 each. Total amount, $612,847, all approved by Derek as the managing member responsible for vendor payments, all supported by invoices that described services so vague as to be meaningless, all coded to a line item in our chart of accounts labeled _8_, a category broad enough to swallow an aircraft carrier. I had reviewed our financials monthly. I had never looked closely at this line because it had grown gradually, incrementally, a few thousand here, a few thousand there, the way a termite infestation advances, invisibly, patiently, until the floor gives way. I sat with this knowledge for a long time. I want to tell you there was a dramatic moment, a surge of anger, a decision made in the heat of righteous fury. But that is not who I am. What I felt was cold, very cold, and very clear. I created a new encrypted folder on my personal laptop. I named it __quote_9__, and I started building a file. Here is something you need to understand about forensic accounting that most people never think about. It is not primarily about finding the smoking gun. Anyone can find a fraudulent payment if they're looking for it. The skill is in building the architecture of evidence so thoroughly, so precisely, so completely, that when the moment comes, there is no possible response except silence and surrender. It is like building a cage. You don't let the animal know it's happening. You place one bar, then another, all while the animal eats and sleeps and moves around freely, completely unaware that the structure surrounding it is nearly complete. I am very good at building cages. While I was building mine, I was also supposed to be resting. My doctor had been clear about this. Dr. Reyes called me every 3 days to check in, and I told her I was resting beautifully, which was technically accurate in the sense that I was resting physically while my mind ran at full capacity, compiling, cross-referencing, and documenting. By the end of October 2022, the Project Close folder contained 47 documents, bank statements with the fraudulent payments highlighted and cross-referenced to Delaware and corporation records, a timeline of every payment from March 2021 to September 2022, with corresponding company revenue figures demonstrating that the scheme had accelerated as our revenue grew. Screenshots of Derek Holt Management LLC's registration documents obtained from the Delaware Secretary of State's public database for a fee of $20. A memo I had written to myself, 12 pages long, single-spaced, documenting every step of the methodology I had used to uncover the fraud. And a separate document, 10 pages long, titled What He Does Not Know. That document was the most important one. In December 2022, 3 months after my hospitalization, I was declared medically fit to return to full activity. I returned to the office on December 5th, wearing a charcoal blazer and the expression of someone who has been ill and is very happy to be back. Derek shook my hand at the door and said it was good to have me back. He looked slightly uncomfortable when he said it, which I filed. I smiled and told him it was good to be back, and meant none of it. Over the following weeks, I went back to work. I attended client meetings. I reviewed work papers. I had lunch with Priya, who told me quietly, over bibimbap at a Korean restaurant on Randolph Street, that Derek had spoken to her about restructuring my role while I was sick. Something about operational efficiency. Something about my health being a liability exposure. Priya told him she wasn't interested in discussing it. She said she thought I should know. I thanked her. I told her it was fine. I went home that evening and added a new section to the Project Close folder. What Quote 14 contained was the following, and I want you to pay close attention here because this is where the story turns. When I drafted the original Marsh Holt Analytics LLC operating agreement in January 2019, I included a provision that I described to Derek as a standard Quote 15. It was on page 22 of a 37-page document. Derek, who did not read the operating agreement before signing it, had no idea what it said. What it said, in relevant part, was this: any member seeking to acquire the other member's interest through a buyout mechanism was required to assume, as a condition of the transfer, all outstanding liabilities of the departing member's interest as of the date of the transfer, including, without limitation, any personal guarantees, indemnification obligations, or contingent liabilities that had been incurred in connection with the company's operations. This was not, strictly speaking, a standard clause. I had drafted it specifically, deliberately, and with the foresight of someone who understood that 50-50 partnerships have a way of becoming adversarial. At the time, I told myself it was prudent risk management. I was right, but for reasons I hadn't entirely anticipated. In January 2023, Derek came to my office, closed the door, and told me he wanted to buy me out. He had prepared a presentation, 12 slides. He had clearly paid someone to design it because it looked professional, which suggested he had been planning this conversation for some time. He proposed purchasing my 50% ownership stake for $900,000, paid over 36 months in equal installments of $25,000 per month. He had hired a business valuation firm, Caldwell Business Valuations, LLC, a shop in Naperville, and their report valued the company at $1.8 million total. He slid the report across the desk with the confidence of someone who believes the other person in the room is not going to read it carefully. I read every page. The valuation used a discounted cash flow methodology based on 2021 earnings, which was convenient because 2022 had been our best year yet, with $4.1 million in revenue, a figure that would have materially increased the valuation. I noted this. I noted several other things. And then I looked at Derek and said, with complete sincerity, Quote 16. He nodded. He said he thought that was fair. He had no idea I had been thinking about it for 4 months. There are 3 things Derek didn't know when he walked into my office with that presentation. The first was the $612,847 I had documented him stealing from our company. The second was the clause on page 22 of the operating agreement. The third was the loan. In August 2022, while I was still healthy, before the hospital, before I found the ghost vendor scheme, Derek had executed a $4,200,000 business line of credit with First Midwest Bank on behalf of Marsh Holt Analytics. The loan documents required both members to sign as guarantors. I had signed. Derek had signed. The line was meant to fund potential acquisitions and bridge cash flow for large engagements. We had drawn $1,100,000 against it to hire additional staff and upgrade our technology infrastructure. The outstanding balance as of January 2023 was $1,018,740.22, with a variable interest rate then sitting at 7.25%. Derek had also, in October 2022, while I was at home recovering, drawn an additional $400,000 from the line without telling me. The stated purpose on the draw request was working capital. The actual purpose, which I discovered when I pulled the bank statements, was a wire transfer to an account I later traced to a private equity venture Derek had invested in personally. The outstanding balance as of my discovery was therefore not $1,018,740.22. It was $1,418,740.22. Plus interest, plus the $612,847 from the ghost vendor scheme, plus the penalties that would accumulate when the loan went into acceleration. I had done the math 37 times. The number always came out the same: $4,718,204.17. That was, when you factored in the operating agreement's liability assumption clause, exactly what Derek would inherit the moment he signed a buyout agreement without reading page 22. I was not going to help him read page 22. In February 2023, I called an attorney named Margaret Okonkwo. Margaret was a 58-year-old commercial litigation attorney at a firm on South Michigan Avenue. She had a reputation in Chicago's legal community for two things: absolute competence and absolute discretion. I had encountered her name in the course of a corporate investigation 3 years earlier and had made a note of it. Her standard hourly rate was $680. She agreed to work with me on a contingency plus cost basis after I walked her through the project close folder in a 2-hour meeting, at the end of which she looked at me over her reading glasses and said, "Ms. Marsh, I want to be very clear about something. This is one of the most well-documented cases I have seen in 30 years of practice." I told her I had had time to prepare. She asked, "How much time?" I said, 4 months. She nodded. "Good," she said. "Then we have everything we need." What followed was 11 weeks of the most meticulous, painstaking, deliberately boring work I have ever done, which is saying something because I have spent my career doing meticulous, painstaking, deliberately boring work. Margaret and I built the case from the outside in. We did not move toward the center until every piece of the outer structure was locked in place. We began by subpoenaing the bank records for Meridian Consulting Advisors, LLC, D. Holt Management, LLC, and Derek's personal accounts, a process that took 3 weeks and revealed, among other things, that Derek had withdrawn $1,140,000 in personal funds from the companies since February 2021, funds that had no documentation as legitimate distributions and every characteristic of embezzlement. We engaged a forensic technology firm to image the company's servers and extract metadata from the invoice documents Derek had used to support the ghost vendor payments. The metadata showed that 11 of the 53 invoices had been created on Derek's personal MacBook Pro. They had been backdated. The metadata showed the actual creation dates. We documented all of this. We cross-referenced, verified, and documented. And then we waited. On March 14, 2023, Derek sent me a follow-up email regarding the buyout proposal. He noted that he had not heard back from me and asked whether I had made a decision. His tone was pleasant, slightly impatient, the tone of someone who considers a deal closed and is waiting for paperwork. I wrote back the same day. I told him I had decided to accept the buyout in principle and would like to finalize the terms. I asked whether his attorney could prepare draft documents. He responded within 20 minutes. He was delighted. His attorney would have documents to me within the week. He looked forward to closing this out cleanly. I read his email twice, and then I printed it and added it to the Project Close folder under a section labeled ___ quote _ 21 __. I had 43 documents in that section. This was now 44. Derek's attorney sent draft buyout documents on March 21st. They were 22 pages long. They proposed the $900,000 purchase price, 36 monthly installments, standard non-compete language, and a general release of all claims. The general release was on page 18, written in the densely formatted language that corporate attorneys use when they want something to feel routine. It would have extinguished my ability to pursue the fraud claims I had been building for 5 months. Page 22 of our original operating agreement, the liability assumption clause, was not addressed anywhere in Derek's draft. It had simply been omitted. Whether this was deliberate or negligent, I genuinely do not know. I have my suspicions. What I know is that it did not matter. I was not going to sign Derek's draft. Margaret and I had prepared our own. On March 27, 2023, Margaret sent Derek's attorney a counterproposal. It was 44 pages long. The cover letter noted that Ms. Marsh had conducted a preliminary review of the company's financial records and had identified certain irregularities she wished to address as a condition of closing. Attached to the counterproposal was a 12-page exhibit titled Summary of Financial Irregularities Identified in Marsh Holt Analytics LLC Records, March 2021 through September 2022. The exhibit contained 53 line items, each one corresponding to a payment made to Meridian Consulting Advisors, LLC, with supporting documentation. It also contained a 4-page analysis of the unauthorized $400,000 draw on the line of credit. And it contained, as Exhibit C, a copy of page 22 of the original operating agreement, with the liability assumption clause highlighted in yellow. Margaret's cover letter explained, with the serene professionalism of someone who does not need to raise her voice, that Ms. Marsh was prepared to proceed with a buyout on revised terms that reflected the true scope of the company's liabilities. The revised purchase price was $0. Ms. Marsh would accept $0 for her 50% interest in exchange for Derek assuming, per the operating agreement, all outstanding liabilities associated with her interest, including the personal guarantees on the line of credit, the liability exposure from the ghost vendor scheme, and any additional claims that might arise from the Illinois Attorney General's whistleblower program, to which Ms. Marsh had already submitted a complaint. I want to tell you that I was in the room when Derek received those documents. I was not. I was in my apartment on North Paulina Street eating pasta and watching a documentary about the Enron scandal, which I found soothing. But Priya, who had been told nothing and figured out everything anyway because she was an excellent analyst, told me later that Derek came out of a phone call with his attorney at approximately 4:30 in the afternoon, walked into the conference room, closed the door, and did not emerge for 45 minutes. When he came out, he had loosened his tie. For Derek, this was the equivalent of a collapse. What happened next was, from a purely technical standpoint, predictable. Derek's attorney called Margaret. There were several heated conversations. Derek denied the fraud. His attorney suggested the ghost vendor payments were legitimate consulting engagements for which documentation had been inadvertently misplaced. Margaret noted that the invoice metadata showed the documents had been created on Derek's personal computer and backdated by periods ranging from 3 to 14 months. Derek's attorney stopped pushing that line. There were negotiations, 3 weeks of them. Derek's initial counterposition was that the liability assumption clause was unenforceable because he had not been informed of its implications at signing. A fascinating legal theory that would have required him to prove he had been deceived, which would have required him to explain why he had signed a 37-page operating agreement without reading it, and why his attorney had not reviewed it before he signed. Neither argument was likely to fare well in front of a Cook County judge. Margaret told his attorney this. His attorney told Derek this. The negotiations continued. On April 18, 2023, Derek Holt signed a modified buyout agreement. The terms? I received $0 for my 50% interest. Derek received full ownership of the company, now to be called Holt Meridian Consulting, LLC, the name he had always wanted. And Derek assumed, per the operating agreement's liability clause, all outstanding liabilities associated with my interest, including my half of the personal guarantee on the First Midwest Bank line of credit, which at that point, with accumulated interest and the unauthorized $400,000 draw, totaled $1,493,602.11. An indemnification obligation related to 3 client engagements in which I had given personal assurances of performance, and a confession of judgment for $612,847, representing the documented ghost vendor payments, which Derek did not contest in the final agreement, because contesting it would have required him to explain the money in a forum where the explanation would become public record. In exchange for my release of civil claims related to the fraud, Derek agreed to cooperate with the Illinois Attorney General's investigation. Margaret had been very precise about this condition. Derek's attorney had been very quiet when she described it. Total documented liability assumed by Derek Holt on April 18, 2023, $4,718,204.17. He signed the agreement in a conference room at his attorney's office. I was not present. I was at my apartment again, this time drinking a very good glass of wine, a 2019 Napa Cabernet, $43 a bottle, which I thought was reasonable for the occasion. Now let me tell you what happened after, because this is the part of the story that people don't always tell, the part after the dramatic moment, when you have to live in the world you've created. Derek did not go quietly. He spent approximately 3 weeks after signing the agreement in what I imagine was a state of furious disbelief. And then he made a decision that was consistent with every decision I had observed him make over 5 years. He did not read the fine print. In this case, the fine print was a UCC-1 financing statement that Margaret had filed on behalf of Marsh Holt Analytics against all company assets in January 2023, before the buyout negotiations began, as a prophylactic measure to secure my claims. When Derek assumed the company and began operating as Holt Meridian Consulting, LLC, the UCC lien, which secured the $612,847 confession of judgment, attached to all business assets, including accounts receivable, equipment, furniture, and the company's intellectual property. Derek's new attorney, a man named Franklin Gross, discovered this when Holt Meridian attempted to open a new line of credit with a different bank in May 2023, and the underwriter found the lien during due diligence. This is why Franklin Gross was calling me that Tuesday afternoon in March. Or rather, it was the Tuesday afternoon in a later month, let me be precise, in May 2023. He wanted to understand what I had done. I explained it to him clearly and helpfully, in the professional manner of someone who finds the work genuinely satisfying. The $4,718,204.17 settled out as follows, and I want to be specific because specificity is the point. The First Midwest Bank line of credit, with interest accrued through August 2023 at 7.25% variable, had grown to $1,624,817.44. When Holt Meridian's cash flow proved insufficient to service the debt, Derek had, in his new configuration, lost 3 major clients who followed me when I started my own firm. The bank accelerated the full amount. Derek's personal guarantee meant he was personally liable. He liquidated the following assets. The West Loop penthouse, sold in September 2023 for $1,142,000, net of mortgage payoff of $840,000, generating $302,000 after closing costs. The 2021 Porsche Cayenne, sold for $68,400. His Breitling Navitimer, sold at auction for $6,200. A personal brokerage account containing $214,000 in diversified equity holdings. and his share of a real estate partnership in which he had invested $180,000 in 2022. Total personal assets liquidated, $770,600. This covered less than half the bank debt. The remainder went to a structured repayment plan negotiated between his attorney and First Midwest, requiring Derek to pay $18,200 per month for the next 6 years at a revised interest rate, secured by a lien on his future earnings. The $612,847 confession of judgment was separately collected through wage garnishment proceedings initiated by Margaret in Cook County Circuit Court. The Illinois Attorney General's investigation concluded in December 2023 with a civil enforcement action resulting in Derek paying $187,500 in fines and disgorgement. His professional consulting certifications were suspended for 2 years. 3 of the clients he retained after the buyout terminated their engagements when the enforcement action became public. Holt Meridian Consulting, LLC, filed for dissolution in March 2024. It had operated as an independent entity for exactly 11 months. The company I built with my 2 hands and 4 years of sleepless nights is gone, in the sense that the name and structure are dissolved. But it is not gone in the sense that matters. I took the client relationships, the methodologies, the systems, and the people, Priya and 6 other employees who chose to come with me, and in June 2023, I incorporated Marsh Analytics Group, LLC. We are smaller now than Marsh Holt was at its peak. In 2023, our first year, we billed $1.8 million. In 2024, we billed $2.6 million. In 2025, we are on track to close the year at $3.9 million. I have 11 employees. I own 100% of the company. I drive a 2021 Subaru Outback with 38,000 miles on it. My operating agreement is 51 pages long, and every member I work with reads it before they sign it. I make sure of that personally. There is something I want to tell you about the 6 months I spent building the Project Close folder, about what it was like to sit across from Derek at client meetings, to review work papers he brought me, to have lunch with him and discuss the company's growth strategy while knowing what I knew and saying nothing. People sometimes ask me, friends when I eventually told this story, colleagues who heard parts of it through professional channels, how I did it, how I sat there and smiled and acted normal. And the honest answer is that it wasn't difficult, because I spent those 6 months reminding myself of something I learned in my first year as a forensic accountant. The truth is neutral. It doesn't need your anger to survive. It doesn't need your tears or your confrontations or your dramatic reveals. The truth is patient. It exists independently of your emotional state, and if you document it correctly and store it carefully and present it at exactly the right moment, it does its work without any help from you at all. Derek's downfall was not something I caused. It was something he built. One ghost vendor payment at a time, one unsigned page of an operating agreement, one unsigned draw request, one unsigned UCC filing that he never thought to check. I simply built the case and waited. His arrogance did the rest. He never once believed I had the capability to outmaneuver him. He had watched me organize work papers and review tax returns for 4 years and concluded that I was a technician, a back office function, useful, but not dangerous. He was wrong. In forensic accounting, we have a term for this kind of cognitive error. We call it scope limitation. It's what happens when the person commissioning the review defines the parameters so narrowly that the most important finding sits just outside the frame. Derek scoped me down to something he could manage. He forgot that I was the one who designed the scope. I want to talk about Priya for a moment because she deserves her own paragraph in this story. Priya Nair was 26 years old when she came to work at Marsh Holt Analytics in April 2019. She had a master's degree in accounting from DePaul and the kind of precise, relentless intelligence that makes a forensic accountant genuinely dangerous. She was the first person I hired. She was the one who told me about Derek's conversations with her while I was in the hospital, the restructuring conversations, the liability exposure conversations, the conversations that made clear what he had been planning while I was connected to a cardiac monitor on the 7th floor of Northwestern Memorial. She did not have to tell me. She chose to. And when I started Marsh Analytics Group in June 2023, she was the first person I called. She is now my Director of Investigations and a 5% equity partner in the firm, which at our current valuation represents an ownership stake worth approximately $180,000. She has never once mentioned that number to me. She does not need to. We understand each other. There is also something I want to say about the hospital, about those 19 days in September 2022, which I have so far described primarily as the context in which I was separated from the office and missed the ghost vendor payments growing in our accounts payable ledger. But those 19 days were also other things. They were long and quiet and frightening in a way that financial fraud never is, because financial fraud involves money and documents and legal processes, all of which are subject to human control. And hypertrophic cardiomyopathy involves a heart that has decided to behave in ways that no spreadsheet can address. I lay in a hospital bed for 19 days and thought about what I was building, and why, and what it would mean if it fell apart. I thought about whether I had built my life too narrowly, whether I had invested so completely in the professional identity of forensic accountant that I had neglected other structures that a person needs. I do not have a dramatic answer to this question. I emerged from those 19 days with a heart that worked differently than it had before, and a clearer sense of what I wanted, which was to build something that was genuinely mine. What Derek gave me, without intending to, was the necessity of that clarity. He forced the question. I had already drafted the answer on page 22 of the operating agreement 3 years before he asked it. I just hadn't known yet exactly when it would become relevant. The Monday after I signed the buyout agreement, April 21st, 2023, a morning in late spring with the kind of Chicago air that is genuinely cold but contains the suggestion that warmth is eventually possible, I woke up at 5:47 a.m. and made coffee. Strong, dark roast, the same kind I'd been drinking the day Franklin Gross called me. I opened my laptop. I created a new folder. I named it Marsh Analytics Group. I opened a new document and began typing the operating agreement. It was longer than the last one. It always is when you know exactly what you're protecting. I typed for 4 hours before going to the office to tell Priya what I was doing and ask if she wanted to come with me. She said yes before I finished the sentence. I typed for another 6 hours that afternoon. The operating agreement for Marsh Analytics Group, LLC, is 51 pages long. Every single provision has been read, understood, and signed by everyone whose name appears on it, including me, especially me. Because here is what I know about documents. They are promises. And promises mean something when the people making them are paying attention. Derek stopped paying attention. That was the only mistake he needed to make. I have one last thing to tell you, and it is smaller than everything else, but somehow it is the thing I keep coming back to. In July 2023, about a month after I filed the incorporation papers for Marsh Analytics Group, I received a package at my new office. It was a padded envelope with a Chicago postmark. Inside was a single item, a copy of the Marsh Holt Analytics LLC operating agreement. Derek's signed copy, 37 pages, with a Post-it note on page 22. The Post-it note said, in handwriting I did not recognize, "You should have read this." There was no return address. I have never determined who sent it. I have my theories. I keep the document in the Project Close folder, which I still have, and which I back up to 3 separate encrypted drives at the first of every month. Old habits. In the forensic accounting business, you learn very early that the document you didn't file is the one that comes back to haunt you. I have never lost a document in my career. I do not intend to start now. If you are watching this and you are in a business partnership, I want to tell you something that no one told me, but that I knew anyway and chose not to act on. Read the entire agreement. Read the one you are signing and the one you wrote. Read it again. Understand what it says when things go wrong, not when everything is going well. Anyone can read a contract in good times. Read it for the provisions that apply when you are in a hospital bed and your partner is restructuring your role in your absence. Read it for the clauses you drafted 3 years ago when you were being prudent and have since forgotten. Read it especially if someone is asking you to sign quickly, casually, without concern. Those are the documents that matter most. And if you are the person who wrote the clause, do not tell yourself you wrote it out of prudent risk management and then decide that the prudence was probably unnecessary. It is always necessary. I have never met a 50-50 business partnership that didn't eventually need its page 22. This has been my story. I built something. Someone tried to take it. He couldn't read, and I could. The math is that simple. If this resonated with you, subscribe. Leave a comment telling me what you would have done differently. I'd genuinely like to know. There are more stories coming about documents, about details, about all the ways that patient, meticulous people win in the end. Thank you for watching. Thank you for paying attention. In my business, that is the most important thing there is.